Hey guys, this is a market update. An incredible move for Bitcoin over the last week. Where do we go from here? We are consolidating right now in this area around 21,000. We also have analysis from David Puel over at ARK Invest. A big report that we're going to go through right here. David Puel is the inventor of the Puel multiple, which has historically been very accurate, giving us large buy zones right here during the bottom of bear markets with this indicator. So we're going to go through his analysis in this video. Bitcoin broke through pretty much all resistance levels and has taken many altcoins with it as well. We're now consolidating around 20,800-ish. This kind of green box here is a big consolidation area. Even if we get sold off from here, which might be likely considering such a big move, even anything down to this level around 19,300, even down to the previous resistance level right here at, let's call it 8,007, 8,008, all of that would still be a pullback with potential to see a bounce, right? So bulls are obviously looking for a bounce at any pullback here all the way down to kind of 18. If we lose this level, then it might have been a fake out, but that seems quite unlikely at the current time. Now, remember, at the end of this month, we have a Fed meeting as well, and they're probably going to try and talk down the market a lot. So, this isn't a bull market, but we may have just printed the bottom for quite a while. You see this bullish divergence on the RSI as well, which has been rising even as the price has been coming down. So I think we can call the bottom is in for at least a long while. And even if the Fed talks us down, we've got a long way to go, even during what is considered probably a medium-term kind of bullish move to the upside. Before we get into the report, if you are a trader, $4,000 deposit bonus on Bybit, so check that out via the link in the description. David Puel looks mostly at on-chain indicators and fundamentals, and most of his indicators are bullish right now. So that's not saying that the price is at all-time highs and that we're in a bull market, but it's just showing that the fundamental strength of the network, in his opinion, is bullish. Now, put that together with where we are with the price at the bottom of a bear market, people can make their own decisions whether they want to accumulate at these levels or not. That's obviously up to the individual investor. So let's look at this. As you can see here, the number of Bitcoin that has not moved since January 2021 is 50%. David thinks this is bullish, a show of strong holder behavior, especially over long-term time horizons. This is the first time since late 2022 and the second since early 2017 that this metric presents current values. Both instances preceded impulsive bullish price action. This came just before the recent bullish price action. So David nailed this one, absolutely. Now, maybe a bit of luck on the timing as well, because there's other macro factors, but it's interesting to see that he essentially called for a bullish impulse, and that's exactly what happened from this metric. Also, medium term with the price of Bitcoin, it looks like 16 to 17 is a major support level. This obviously ties up as well with previous resistance levels in previous bull markets. And we've just seen a lot of trade around here. As you can see, it's really the most Bitcoin is traded around this 17,000 level. So this 17 to, let's say, 23, 24 level, this would be, for me, probably a bottom and a top to the current range. We've had a massive bullish breakout from a low, but, we're still not in a bull market. And so anywhere from kind of 17 to, let's say, 23, 24 would probably be a good area for Bitcoin to trade in for a while. And it seems like that's where most people want to trade. As you can see, ARK Invest think this is bullish. The levels between 16 and 17.5 present the zone where the most Bitcoins changed hands in history. And so, as we know, support and resistance, the price tends to congregate around areas where the price has traded before. And so it's a very important level. If we look at the chart right here, this is the 17 level where my mouse cursor is. I'll just draw a line in right here around this level. So you can see a huge support area in the previous, drawdown, what we got from the high. And then FTX pushed us way under that. But it's clear we have a lot of support around this level below 16 and 17 as well. And so we've broken out to the upside. If we test this level again, short-term trade, I'd probably be a buyer there, notwithstanding any macro hiccups or anything. 16, 17 seems to be a very, very important level and probably a massive area of support as we go into an easier environment. The report also looks at coin days destroyed, which is a measure of seeing where old coins are spent or when they're spent. And as you can see, during each bear market, this tends to be quite low as holders are really just, staying tight, right? So a low value of coin days destroyed conveys that holders remain strong despite the multiple frauds and grey swan events. So as you can see at previous bear market bottoms, we get this CoinDays destroyed down here. So as I've been saying for a while, you know, we are at the bottom of a bear market in terms of the Bitcoin cycle. Now, macro can determine the price as well, and maybe it can push the price 100% to the upside, 50% to the downside, something like that. But if you're a long-term investor, you know, the Bitcoin bear markets, the bottom of the cycles are the times to accumulate. The price is something that is, you know, out of our control. Addresses with non-zero balance have stayed pretty level throughout December, according to this report. So we can see that here. Now, non-zero balances, obviously the more the better, right? This shows fundamental user adoption, more wallets with some Bitcoin on there, obviously shows user adoption over time. I think for long-term investors, this is a great chart because what you're looking at is just a straight line upwards. Like if you can just invest and have a long-term time horizon, 5-10 years, you're getting into one of the fastest growing networks fundamentally, right? And the price takes care of itself the higher this goes. Now, we've just had a kind of leveling off during this bear market, which is usual during a bear market, less participants coming in. This is neutral according to David, as you can see here in this report. We believe this confirms uncertainty on the part of potential new market participants. Everyone knows what's happened over the last 12 months. No, not a great environment, especially for people maybe looking to buy their first Bitcoin. Very, very scary time. And so that just kind of plays into, you know, what's happening in the real world. However, as we can see here from Glassnode, this is a really great data point, is that there was a massive capitulation during the FTX blow up and that kind of area where a lot of institutions, large holders, really capitulated. Miners capitulated, large holders and institutions kind of were selling out there. But where that Bitcoin went was to entities with under 1 BTC. So this is normal investors, normal people that have taken this opportunity to accumulate Bitcoin, take it off the exchange into their wallet. And so some of this might be just normal investors that had their coins on an exchange and then took it out to their wallet. And so they're now being accounted for in that 1 BTC. But some of this would have been individual investors saying, I'm just going to mop up some here, and basically distributing that ownership around the network. So yes, maybe new entrants are not getting involved as much, but entrants that either had their Bitcoin on exchanges or have maybe had less Bitcoin really took this opportunity. So it's a good data point to see that even though new entrants slowed a little bit, it seems like, you know, market participants, people that held Bitcoin already, you know, are just buying it from capitulation from miners and other large institutions. Another really interesting data point is volatility. And, you know, the last few months has been dire. The price has just gone sideways and like nothing had happened. You know, traders are chopping themselves to bits. But this low volatility always ends up with high volatility and a breakout outside of that. So this is BTC's monthly volatility reached 25% at the close of 2022, its lowest level since late 2020. I'll show you all of these breakouts. This is neutral in ARK's view. Generally is a neutral sign. In our view, it does suggest an upcoming expansion in the form of a breakdown or a breakout. That's finance speak for, you know, it's either going to go up or down like violently, and we've seen it go up. So David inadvertently basically predicted this huge breakout to the upside, you know, before it happens. So that was what he was seeing from on-chain data. So when volatility gets extremely low, then at some point, TA people will tell you this is going to break out. And so very, very low volatility here. So we can see that on the chart as well. Bitcoin markets are infamous for their volatility. However, in spite of this, the holiday break, this was December, was exceptionally quiet. Realized vol over the last month for BTC declined to multi-year lows, of which there are very few instances with similar levels. However, all prior examples preceded much higher volatility environments on the road ahead, with most trading higher and just one trading dramatically lower. So when you get this volatility and this consolidation here, you get a breakout. And in previous Bitcoin history, most of those breakouts are to the upside. As we know, we just get the blow off top, and then it's just this slow drip down, consolidation, and then it starts going up again in previous cycles. So all of these other bear market or bull markets, as you can see here, we have this explosion of volatility. You can see this on the chart. This is the blue lines right here. So each time you get a massive drawdown in volatility, you get the explosion in volatility, which for most of these occasions has been to the upside, and that happened once again right here. A potential downside risk factor is what's happening with the Grayscale Bitcoin Trust right here. And as we know, DCG, or Digital Currency Group, are essentially insolvent at this point. They're in the hole for around $500 to $700 million. We know that they're now under investigation by the SEC for an unregistered securities offering potentially, which is their yield product. Gemini Earn went into that's how they were generating yield. And so they're now under investigation by the SEC. The reason why this is important is because this GBTC, the Grayscale Bitcoin Trust, holds around 3% of Bitcoin supply. So it holds a lot. Now, one of the ways that Grayscale could potentially pay back creditors, or DCG, is to redeem this trust. So what's happening here is that there is a value of Bitcoin in this trust because Bitcoin has a market value, but you can't take your assets out of this trust. And so it trades at a discount, as you can see here. And that's around 45%. So if you buy the shares of this trust, what essentially you're doing is buying Bitcoin for, let's say, 10,000 instead of what the market price is. Let's call it a 45% discount. So, why would you not do that? Well, your money's tied up in the trust, right? And so the only way to get it back is to potentially redeem the shares. But Grayscale don't want to do that because they earn a fat fee for this trust. Well, one of the ways, if they are to declare bankruptcy, is to maybe redeem the trust. And that means 3% of Bitcoin supply may suddenly be liquid again. Now, what's going to happen with some of that? Maybe it gets sold off. Maybe it gets dumped on the market. That could be a potential downside, risk factor right here. So this is a mess. For the most part, the market does know, what Grayscale owes. So we must think that maybe some of this maybe is priced in. We don't really know, because if this gets redeemed, there might be a lot of Bitcoin changing hands. And so there's going to be some volatility. Now, something interesting is that, as you can see here, the discount of the trust to Bitcoin has been narrowing. So this doesn't follow the price of Bitcoin, but this will be a discount or premium to the price of Bitcoin. Now, the bigger the discount, that means that people are trying to sell this thing off, sell out at a loss essentially to the actual price of Bitcoin, because they're fed up with the shares there, and they don't have any confidence in the product. Just as Bitcoin was starting its price rise, not only that, this discount was also narrowing. There are some rumors that some investment banks were actually bidding this up and buying this. It's narrowed to 38%. Potentially, what some institutions may know or not know is that one of the ways DCG will pay back its creditors is to redeem this trust. And so, a good trade would be here a narrowing of the discount. So you're not actually paying the Bitcoin price. You're trading the premium or discount. So a narrowing of the discount is the same as you making money on shares. So it's a bit complex, but if DCG have to declare bankruptcy, there could be a lot of Bitcoin supply. Not all of it will get sold. Maybe some of it will go into other products, or some people will just hold the Bitcoin, but some of it surely will be sold. And so this is definitely a potential downside risk factor that seems to be playing out over the next few months. For as long as Bitcoin price action is strong, it's going to take all altcoins with it as well, especially the most beaten up names. But looking forward to the end of this month, the FOMC meeting, I doubt the Fed are going to flip dovish at this point, right? They're probably going to say, we're raising another 25 basis points. We're going to keep it there. The job isn't done. And so it really depends on what the markets think of that in terms of just ignoring them and maybe consolidating around these levels. But for right now, the fundamentals just deserved this pump. This isn't a random pump. It's definitely fundamentals driven. With the network still growing over time and just the macro changing a little bit. If you are a trader, get up to 4,000 deposit bonus on Bybit. Link in description for that. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.